Hello and welcome to helpyourmath.com. In this video, we're going to have an introduction to financial investments. And before I continue on, I just want to remind you that this video is for instructional purposes only, educational purposes only. I am by no means a financial expert by any stretch of anyone's imagination. Okay, so we're going to talk about stocks. There are many ways to invest money. You can invest your money in stocks, which is the one we're going to focus on in this lesson, bonds, and mutual funds. There's a lot of vocabulary associated with these, so let's get started with that. First, there's the dividend. That's your share of the profits when the company earns a profit. It can be given as cash or shares of the company. There's also capital gain. This is the profit from selling your shares of a stock over what you paid. So if you sell it for more than what you paid for it, that's a capital gain. That's a good thing, right? That means you made money off the stock, which is kind of the goal. However, on the other hand, there is a capital loss, and this is the loss from selling your shares of a stock for less than what you paid. There's also the return on investment. This is the net difference between what you receive and what you pay. So the three types of investments that I mentioned previously are stocks, bonds, and mutual funds, and these would be the definitions of those three. So stocks, this is a type of security that signifies ownership in a part of a corporation and represents a claim on part of the corporation's assets and earnings. There's also bonds. These are debt investments in which an investor loans money to an entity which borrows the funds for a defined period of time at a variable or fixed rate. Owners of bonds are the debt holders of the issuer. And there's mutual funds. These are investment programs funded by shareholders that trade in diversified holdings and is professionally managed. Okay, so in our first example, we are going to find the return on a stock ownership. So we're going to work with Tarek today, and Tarek bought 300 shares of Nike stock on March 14th, 2018, and he paid $66.20 per share. On March 14th, 2019, he received a dividend of 40 cents per share, and the stock price had risen to $86.87 per share. We're going to ignore any other costs other than the purchase price. We'll find each of the following. So first, Tarek's total cost for the stock. So this is when he went to buy them in 2018. How much did he end up paying? Well, he got, this is, and then here I just say what it is. So it's shares purchased. So he purchased 300 shares times the purchase price, $66.20. And I don't think I mentioned it yet, but you'll definitely want a calculator handy for this because nobody wants to do this arithmetic by hand. So please make sure you have a calculator. When we multiply this through, it turns out that he had to spend $19,860 to buy these 300 shares of Nike. Okay, what was the dividend amount? So how much did he receive? This is the number of shares times the dividend price, and it says it was 40 cents per share, so that would be 0.40, and he got $120 in dividends. Tarek's capital gain, if he sold the stock on March 14th, 2019, this would be, so this is the capital gain. This is how much he made from the time he sold it to how much he spent on it. So it's going to be shares sold, which was 300, if he sold the whole thing, times the selling price, $86.87, minus the cost of the stock, or the answer to part A, so minus $19,860. When I calculated 300 times 86.87, I ended up getting 26,061 minus part A, and I end up getting $6,201 in capital gain. Next, we want to find Tarek's total return on his 1-year ownership of the stock. So this is the total dividends, part B, plus the capital gain, part C. So 120 plus 6,201, and he made a grand total of $6,321. Go Tarek, that is awesome. Now the next thing we want to know, right, I mean, $6,000 is $6,000, that's pretty nice, but we're also interested in the percent return. So how much did he get for this, or what percent of how much he invested did he get out of it? So this would be the total return, $6,321, divided by the purchase price, $19,860, times 100% to convert it to a percent. And it turns out that his percentage return was about 31.82%. So he did phenomenal on this purchase. He made a good choice here. Okay, let's talk about Andrea. And always, I encourage you, pause the video, try to figure out these 5 values, see how you do. Okay, so first, the cost for the stocks, that's going to be the number of shares times the purchase price, times 134.74. And it turns out Andrea spent $16,842.50 to buy these Facebook stocks shares. The dividend amount would be the number of shares, 125, times the cost per share, and she gets 35 cents per share. So she's going to get $43.75 on the dividends. And what was her capital gain if she sold the stock on April 8th, based on 2015, based on the information we have? Well, she had 125 shares, and she sold them for $140.55 each. And we're going to subtract from this part A, which is $16,842.50. When I calculated 125 times 140.55, I ended up getting $17,568.75 minus this. And I got that her capital gain was $726.25. Her total return, this is going to be parts B and C added together, so $43.75 plus $726.25, and that adds up to $770. So her total return was $770. And then what was the percent return? So, you know, again, it's nice to have $770, but was this a really good thing that she did? We would take her total return and divide it by how much she spent, 842.50, and we'll multiply by 100% to convert it to a percent. And her percent return was only 4.57. So not as good as Tareq's, but hey, it's still money that she didn't previously have, so not too bad. This has been a brief introduction to stock ownership. Thank you for stopping by.